Hello, we are back talking some more about cash flow statements, and we're going to get into how to do the operating cash section of the cash flow statement. So this is class 38 if you're a Monday, Wednesday, Friday person, and 26B if you're Tuesday, Thursday person. Now this probably isn't the best format to talk about how to do this. I think actually sitting down and working it together as we'll do in class is probably going to help you understand it a little better. But I'll describe the steps and hopefully you'll sort of start to get an understanding of how to do this section of the cash flow statement, using the indirect method. Alright, so, oops, sorry, gotta hit F5. Alright, so you may recall from the last video that there's two methods of preparing cash flow statements, indirect and direct. For this class, we are only going to worry about indirect. And it's indirect because we don't really take the actual cash flows. We do it indirectly. We take what we know about the cash flows and apply that. So we don't actually go, here's the cash flow, put it on the statement. Here's the cash flow, put it on the statement. We go, what were the changes in this part of the balance sheet? So we can infer that if this part of the balance sheet increased, then we must have spent cash for that, right? So it's sort of like making a series of inferences about cash based on changes. So it's indirect and not just directly, here's how much cash we spent. All right. So, how is it prepared? Well, here, let's start with what we need. All right? So for you to do an indirect method, you need the income statement for the current year, because that's what we're reconciling to the cash. We're going to take that net income and say, how does that compare to the cash flow? How do we turn that into our changes in cash? Then we need the balance sheet for the current year and the balance sheet for last year, because what the point of a cash flow statement is last year's cash, what were the changes that became this year's cash, right? So you need to get those cash balances. And any additional information to review the transactions. So really, you're starting out with this year's net income, last year's cash balance, this year's cash balance. So you need income statement and 2 years of balance sheet. Okay, so what are the steps? So the steps for doing the indirect method is complete the cash flows from operating activities, complete the cash flows from investing, complete the cash flows from financing, compute the change in cash, prepare a schedule for non-cash activities. All right, so we're going to do indirect, and we're going to work first on the operating activities. All right, because really between indirect and direct, really the only difference is in the operating activities. So let's talk about doing the cash flow from operations indirect. This is how you do the entire section, all three sections. All right, so first thing you need is a comparative balance sheet, which that means you've got 2 years. All right, so you've got 2 years of the balance sheet, and it shows you the increases and decreases in the various accounts, right? So this is the information you need, right? So you see your changes in your current assets. Well, that $20,000 change in cash is what we're going to explain. We're going to use our cash flow statement to say, well, between 2015 when we had 42,000 cash and 2016 when we had 22,000 cash, there was a change of $20,000 in cash. Where did that come from? Was it from investing? Was it from investing, operations, investing, or financing? Right? And as you can see, during the course of time, the various assets changed, right? And the various liabilities changed, and the various liabilities and equity accounts changed. So it's those changes in those other accounts that cause cash to change. So let's look at how we do that. We need our balance sheet and we need our income statement, because when we're doing indirect method, we're saying, how did this income impact cash? And so we're looking at how this changed, right? And so we need that. And what we end up with is a statement of cash flows that looks like this. So this is an overall. This is how do we do this? Well, again, we're going to practice this in class, and I'm going to break out just the operating activities in a few minutes. But here's your first idea of what a cash flow statement is, right? So your cash flow statement indirect, which is the only kind we're doing, at the very top of it, you take this net income you got from your income statement, $40,000, and you put that at the top of your cash flow statement. So you're starting with cash flows from operating activities. You start with net income. Then you're going to make adjustments to it. So we're going to talk about these adjustments in a little more detail. But as you can see, in the operating section, we add back in any non-cash expenses, which is like depreciation, right? Because remember, this is a cash flow statement. But our income statement has all these expenses, right? And one of them is not a cash expense. So we're going to add that back in. So the first thing you do is you start with net income, add back in the non-cash expense, add in gain of disposals on assets, income from accruals, decrease. So we're doing all our adds and subtracts that are operating. Then we do any additional cash flows from investing, any additional cash flows from financing, and what we end up with is our change in cash, net cash provided, and then net increase or decrease in cash, and then we compare it to last year's, and we should end up with this year's. Right? We add or subtract it, and we come up with our cash. So the point is that we start with net income, we add and subtract our cash, and at the end we come up with our change in cash, which we add or subtract to last year's to come up with this year. So that's the point, is we're just reconciling all the things that happened, and we end up with how our cash changed. Now, that's a lot. We're going to break out just the operating. All right, so we're going to talk about just the operating section of the cash flow statement right now. So we're going to break out this part and talk about it. And like I said, I think it's a little easier in class. So when we get to class, we'll do that. All right, so let's talk about cash flows from operating activities. When using the indirect method, the statement of cash flows operating activities section begins with net income or net loss, because revenues and expenses, which affect net income, produce cash receipts and cash payments. Revenues bring in cash receipts and expenses must be paid. But net income, as shown on the income statement, is accrual based, and the cash flows do not always equal the accrual basis revenues and expenses. For example, sales on account generate revenues that increase net income, right? So you make a sale, you get an account receivable. Well, you increased your revenue, but you didn't get any cash yet. Accrued expenses decrease net income, but the company has not yet paid cash if the expenses are accrued. So, at the end of the month or the year, we do those adjusting entries where we accrue interest or rent or something, and those were expenses, but we just didn't pay cash. So we have to take those into account and realize that our net income has those accruals that were not related to cash. So accrued expenses decrease net income, but the company has not yet paid cash if the expenses accrued. To go from net income to cash flow, we must make some adjustments to net income on the statement of cash flows. These additions and subtractions follow net income and are labeled adjustments to reconcile net income to net cash provided by operating activities. So the operating activities section, we're going to talk about that first. All right, so we talked about how on the statement of cash flows we start out with net income. So the first part of the statement of cash flows is the cash flows from operating activities. All right, and we start at the top with net income, and we're going to add and subtract to net income to show how that net income affected cash. Okay, so the first thing you do is you write net income at the top, and you get that from your income statement. So there's our $40,000 net income. Then the next thing you do is you have to add back in your non-cash expenses, because those came out of income, but they weren't cash, right? So you add them back in to the income. So you start with net income, add back in depreciation. So for our class, really, we didn't really talk much about depletion or amortization. So, but there is depreciation, right? You know, as buildings are expensed, as plant equipment is expensed, any long-term plant asset is expensed, we're using depreciation. But really, there's no cash, right? It's just an accrued expense. So we add it back in. So the first line on your cash flows from operation is net income. The second is you're listing all your adjustments to reconcile net income. Well, the first thing you do is you're going to add back in depreciation expense, right? Which you get from your income statement. All right. So we need that. We go look at the income statement. And you say, oh, here's my depreciation expense. Add it back in. So in this case, it's $20,000. All right. Next, changes in current adjustments to reconcile net income to cash provided by operating expenses, gain on disposal of plant assets. All right. So disposals from long-term assets create a gain or loss that must be removed from operating net income, which is the operating activities section. All right, so gain or disposal on plant assets. So a plant asset is not something you would normally sell. Imagine that like your truck, your delivery truck. You sold your delivery truck. So disposals of long-term assets such as land and building are investing activities, and they usually create a gain or loss. The gain or loss is included in net income, which is already in the operating activities section in the statement of cash flows. The gain or loss must be removed from net income on the statement of cash flows so the total cash receipts can be shown in the investing section. All right, so the gain or loss part goes in the operating section. So let's suppose you had a plant asset and you had a gain on it. All right, you sold the delivery truck. You sold some old office furniture, right? And you had a gain. Well, if you have a gain, that would have increased your net income. So we need to take it out of the operating activities. So if you had a gain when you sold something, you take it out. If you had a loss, you add it back in. So that is not, that's adjusting the net income so we can get our correct cash. All right, the next part of the cash flows from operating activities is changes in current assets and current liabilities. So you need to, for your next part, you need to think about, okay, have my accounts receivables gone up or down, right? That means we had some revenues, but we didn't get cash for them, right? That's what a receivable is. I sold something and I didn't get cash. So you have to think about these current assets and current liabilities, like accounts payable. I bought some merchandise inventory, but I didn't pay cash for it, right? Or I got some unearned revenue. So you have to think about your current liabilities and your current assets, how they changed, and now you're going to add or subtract that back in. Most current assets and current liabilities result from operating activities. For example, accounts receivable result from sales, and merchandise inventory relates to cost of goods sold. Changes in the current assets and current liabilities accounts create adjustments to net income on the statement of cash flows as follows. An increase in a current asset, okay, other than cash, we're not dealing with cash at all when we're doing these adjustments right here. So an increase in accounts receivable means, oh, we sold something but we didn't get cash for it, so we need to take that out of our net income, right? Because we're adjusting the net income. So if I had a sale but I didn't get cash, oh, I need to adjust that, right? So if I have my accounts receivable goes up, I need to decrease cash. If I had my supplies went up, well, that means well, I must have paid for some supplies, so I need to decrease cash. So you look at through all your current assets and you see what was the change in current assets, and an increase causes you to decrease, right? Increase in accounts receivable means you decrease it. A decrease in merchandise inventory means you increase cash, because that means you sold some. So anyway, you got some cash from that. So a decrease in assets causes an increase. So it's kind of flipped. Increase in current asset causes a decrease in cash. Decrease in current assets causes an increase in cash. Now, in liabilities, if you increase a liability, you increase cash. If you decrease a liability, you decrease cash. Because think about it. If I've decreased my liability, that means I paid for it, right? So my cash must have gone down. So you're indirectly assuming, well, what happened to cash based on how these things increased or decreased. All right? So once you, and remember, the operating activities, as you may recall from back on the last video when we talked about operating activities are associated with the current assets and current liabilities sections of the balance sheet. So we're not going to worry about increases or decreases in long-term liabilities. We're not going to worry about increases or decreases in stockholders' equity. We're not going to worry about increases or decreases in plant assets, right? The only thing that had to do with plant assets was this gain or loss on the disposal of them, right? So if we increase or decrease an actual plant asset itself, that'll get taken care of in the investing section. So once you've looked at your increases and decreases in current assets and your increases and decreases in current liabilities and adjusted your cash as appropriate in the operating section, you're done with the operating section, and you should have some total increase or decrease in cash based on looking at those changes. All right. So when you evaluate this section, the evaluating cash flows from operating activities, you'll see that you started with net income of $40,000. Then you added back in your non-cash expenses. You subtracted any gain on the disposal of an asset or added a loss on the disposal of an asset. Then your changes in assets, you increase or decrease. Your changes in liabilities, you increase or decrease. And you came out with some net change to cash. In this case, it was an increase of $30,000. So you've got your net cash provided by operating activities turns out to be $70,000. $40,000 net income plus what we've added and subtracted to make up for the accruals, which is $30,000. So your net cash provided by operating activities is $70,000. And that's what we're interested in. What was that change in cash provided by operating activities? So that's probably what people are most interested in, because if your operating activities aren't creating some cash, then, you know, what's the point, right? All right. So what do you think about when you think about cash flows from operating activities? Well, always start with accrual basis net income. Then you add back all non-cash expenses. These are the steps for the operating activities section. Add back all non-cash income, subtract gains from net income, and add losses. 4, when current assets increase, treat that as a use of cash, subtract it. When current assets decrease, consider it a source of cash and add it. When liabilities increase, we treat that as a source of cash and add it. When liabilities decrease, we treat that as a use of cash and we'll subtract it. So all we're doing is going back through the balance sheet, seeing how things changed, and was that a use of cash or did we get some cash, and we're adding it or subtracting it, and it tells us how our operations went. Alright, so that's indirect. We're not going to do direct, and the next video we'll go on and think about how we do cash, how we handle cash from investing and cash from financing. Alright, so good luck. We'll practice this in class.